Friday, July 25th, 4:25 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. We just finished another week. U.S. stock markets close. Next week, the United States has a big economic event. If you're a Patreon member, you're well aware of it because I've been mentioning it often. Next Wednesday, United States Central Bank, aka Federal Reserve, scheduled to vote on the interest rates. Two things occur. They either change them or leave them unchanged. The market is anticipating them to leave them unchanged. Next, they will be making a statement of the current situation of the U.S. economy and the expectations into the next meeting. Plus, next week is the last week of the month. Some individuals at work make contributions the last week of the month. Some make it the middle of the month. Some make it the first week of the month. Contributions to invest in their investment funds. So you may see an inflow into the U.S. markets. Doesn't mean they're bullish. They're doing what's referred to as dollar cost average. Just regularly doing withdrawals from their payroll into the U.S. markets for long-term investing. So some of that money might be going in at the highs of the market. Also, I mentioned to our Patreon members, we have an event coming into the 1st of August. Public information is on the White House press release. The tariffs for August 1st are still scheduled to take place. This video is going to go over the S&P 500 sectors. S&P 500 is a stock index, and it's broken down to 11 sectors. That being said, let's first look at the S&P 500 stock index, the cash index. This is 5 years of history. Each candle's a week. This week, we made an all-time new high. Look at the top right, yellow horizontal line, saying what? Saying 20, 25-year high. Look where the low is. So the momentum is up. It's a bullish trend. It's overextended. This is a key level. Used a lot of energy to get up there, and one would expect it's going to have retracement there at some point in time. This being said, there's also a gap here that has not been filled yet. Big concerns. We'll go to the sectors, the 11 sectors, in order of their weighted average, what percentage they represent in the S&P 500. Those 11 sectors, they do not all represent the same weighted average. That information is on my Patreon page. All right, let's go over to the sectors. I'm going to give you a rundown, and then we'll look at the charts. The top 3 sectors most often are technology, healthcare, and financials. Shared a video a few days ago on the Dow 30 stock index. Many of those financial individual companies are making all-time new highs for the year and taking out their prior all-time highs. The financials have been strong. The financials make up almost 14% of the S&P 500. The technology sector makes up almost 2,100. These are stock ETFs. You could trade these. You could invest in these. You could outperform the S&P 500. Look, I just showed you the prior chart of the S&P 500. You're situation aware that it made an all-time new high. You're also situation aware of concerns I showed you on that chart. So this is technology. This week, all-time new high. There's a gap here. And there's that big move up there. Very similar. Why is it very similar? Because it makes up the largest percentage of the S&P 500. Of course, there's going to be heavily similar. Healthcare, big difference. Look at this on this top yellow horizontal line. We are below the highs. We still have not taken out the highs of last year. It's underperforming. It's a loser. So this makes up part of the S&P 500. So you can outperform the S&P 500 with not including this sector. For the week, it formed a bullish engulfing candle. It's also in a huge consolidation. This huge consolidation in that bullish engulfing candle, very likely, will be testing either this swing high or this swing low. Yep. And then when it does test one of those two, that's going to set up another trade. So right now, it's bearish. Got it? Making lower highs, lower lows. If you're bearish, then one can watch it to be pumped up in here and look for a bearish opportunity to trade bearish. XLF financials. Yep. All-time new high. No gap in here. Technology had one. Big gap down here has not been filled yet. Extend it out. There we go. Consumer discretionary. Look, it's a loser. It's below the highs of last year. It's still below the highs of this year. It's underperforming the stock index, as well as several sectors. Communication services, all-time new high. Forming what looks like a bearish pin bar pair. That's concerning. Industrial, all-time new high. There's a gap here too. And that big move up. Consumer staples, still below the highs of last year. Huge consolidation. And I think it's going to have a opportunity for a trade out there when it tests one of those key levels, either here or here. Consolidations and looking for those breakouts where there's going to be a setup after that occurs. So we have a big difference. You have the S&P 500 that's trending, that made an all-time new high. You have several sectors and huge consolidations. Resting, building energy for the next move, either up or down. Energy, disappointing. Look at that, way below the highs of last year. And here we go. Big consolidation building here. So yeah, that big red candle, that was an impulse move down. We've done a retracement on it. See consolidation, breakup, consolidation. Yeah, looking for a breakout here. To the upside or downside. Utilities, all-time new high. It broke out of this consolidation a few weeks ago. Oops, let's fix this. There we go. Real estate. Top left, look at this. The highs of 2021. Then come over here. The highs of 2024. Loser. Underperforming many sectors, underperforming the S&P 500. For the week, we broke out of the consolidation. Nice. Huge consolidation. Breakout to the upside. Getting ready to set up for a trade. Yeah, more likely has a chance of testing this swing high. Doesn't mean he's going to go all the way up there one time. I'm looking for setup on the lower time frame. Basic materials. Below the highs of last year. Loser. Just shy of retesting the highs of this year. So overall, majority of the sectors are not up to par with the S&P 500 itself. Again, The heavily weighted average company sectors, such as the financials, are certainly doing its thing of outperforming majority of the sectors and helping the S&P 500. That's not a balanced, healthy market. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching.